We're joined now by Dirk Becker, a Frankfurt-based analyst at Kepler Capital Markets. He's got a buy rating on Credit Suisse shares. In fact, he has called the company one of a kind. Dirk, it's great to have you back. Let's talk about these numbers. Credit Suisse shares declining, not by a ton. Why do you think, given these what would appear to be better than expected results, the market hasn't taken heart?
Yeah, I think this is just a little bit of turn in sentiment. After the JP Morgan figures, the expectations have gone a little bit too high, and we've seen, every single bank which reported since then, no matter how good the results were, the share price dropped, and that's what we're seeing today. I think long term it's still a fantastic company, and we still have a buy rating on the stock.
Dirk, some analysts have raised questions as to whether there's enough quality in these earnings as opposed to quantity. Do you think there's a quality problem?
No, I don't think there's a quality problem at all. The results have been achieved against the background of lower risk-weighted assets, a lower value at risk, so they are taking less risk, and the earnings they make come from market share gains and from client flows. There are a couple of extraordinaries in the numbers, but these had been flagged up before, so they should have been in the expectations, particularly this 200 million gain on Aberdeen Asset Management.
Okay, so given the fact that they're taking down risk and they're getting their trading revenue from client flows, do you see the evidence that you were looking for that their trading revenue is sustainable going forward?
Yeah, absolutely. We are seeing that they still have some market share gains that they are running after. For instance, in foreign exchange trading and commodities trading, they are stepping up the efforts, and they will probably be successful there, given that they are one of the best capitalized banks and one of the best recognized banks. So they will continue to win market shares in selected areas. And on the other side, we will see some market normalization coming up, which will also allow them to stabilize and increase revenues. So I have no problems with the sustainability of these earnings. I think they are sustainable.
Dirk, as you pointed out a few months ago, Credit Suisse, among those banks that really dialed down risk, we saw evidence of it today. Morgan Stanley was another that comes to mind, and we saw evidence just a couple of days ago. Morgan Stanley is taking its value at risk, the VaR, up. I guess the appetite for risk in Morgan Stanley going up. Do you think Credit Suisse is going to be similarly tempted?
At some point they might be, but at the moment the strategy is really very clearly to de-risk the bank, focus on client flows, take out all proprietary risk, and they've been very successful doing that. At some point maybe the temptation gets high again, but at the moment we can't see any evidence for that, and really the earnings come from client flows. That's as simple as that, and I mean very great so.
Dirk, thank you very much. Dirk Becker at Kepler Capital Markets in Frankfurt, everybody, talking to us about Credit Suisse.